What is going on, traders? Welcome back to the Traveling Trader. Good to see you again. Hope you guys are doing well. In this video, we're going to be talking about NIO. I will give you a NIO price update. We'll talk about the Bank of America price upgrade. We'll be looking at the NIO charts, of course, and I will show you some really bullish indicators that are popping up on the charts. And as always, I'll be telling you how I'm trading NIO, so you definitely want to stick around for that. But before we get into it, if you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know what your position is on NIO. And if you are not subscribed to the channel, make sure you subscribe. A lot of you guys who watch are not subscribed, so make sure you hit that button. And if you watch my last video on LCA, I was saying that the merger is coming up tomorrow, and I was expecting a rally going into that merger, and it looks like that is happening. Currently, we have a very nice juicy position on LCA, up almost 30% on this options trade. I did send this out in the trade alerts, and if you want access to our wonderful trading group, in my opinion, the best trading group on YouTube, link is in the description below. Let us get right into NIO, folks. So as you may know or may not know, NIO just completed a secondary offering. This actually closed yesterday. They raised an additional $3 billion. How do companies do this? Well, public companies will release more shares to the public in hopes that the demand for those shares stays high and that they can raise additional money through issuing more shares. Now, this has become more and more common in this hysterical landscape that we're in, where people are just really rabid about buying EV stocks and hype stocks. And NIO, along with other companies like XPEV, JKS, etc., are hoping to capitalize on that hype, and so they release more shares at a time when they think that the interest for their company is at an all-time high, and they're right. This is the time to do it. Now, a lot of new traders look at this as negative because we see a price drop in the interim, but the price is dropping because it's diluting the shares, right? When you offer more of something, then the short-term value of what you're offering has to decline a bit until demand ramps up to meet that supply, right? It's just the laws of supply and demand. So that is why we tend to see a minor price drop at the time when companies issue more shares. And they issued these shares at a price of $39 per share. However, why are they doing this? Well, they're doing this for a couple of reasons. One, to further the acceleration of their autonomous driving software. And two, they actually announced in their last earnings call that they are developing two new sedans, two new vehicles for 2021. The ET7, which you see pictured here, this is one of them. Moreover, we know that they have plans to expand at least into Europe next year. So they are looking beyond China, which obviously, as you guys know, China alone is the biggest EV market in the world. And they are looking to take this to Europe and hopefully other locales in the future. So they do need to raise money in order to do that. So in the long term, this is actually a good thing because you see the company ramping up operations for future plans. All right, so the second thing that we want to talk about is the Bank of America price target. Bank of America bumped up the price target on NIO to about $54.70, which is not too crazy because we actually already hit above that just a couple of weeks ago. NIO was trading at around $57. So this is in line with what we've already seen with NIO, not too crazy, but I don't want to focus too much on Bank of America's price upgrade because it's self-explanatory. So let us take a look at the charts and I will show you what bullish indicators I see, and then I'll tell you how I'm trading NIO going forward. So we did see a little bit of a price drop. Now, this was due to a few things. One, the China delisting House vote, which actually passed, and two, the offering that I was talking about, right? So the offering did dilute the shares a bit, and we did see a price drop, but the price dropped to a major moving average, the 50-day moving average. And if you're a fan of this channel, you know I always talk about these retracements as solid buy points for momentum stocks that are in bullish trajectories. Now, we do see a divergence between the price, between the stochastic RSI and the RSI itself. This is called hidden bullish divergence. When the price is making a higher low and these oscillators are making lower lows, this is a very bullish sign, especially when the stock has retraced. It is basically telling us that the retracement is probably or potentially over and that we can see a price boost from here. Another thing is the AD line. This is the accumulation distribution line. This continues to remain positive even after the slight decline. This is telling us that the market is more interested in the advancing shares than the declining shares of NIO. All right, so a couple more things on the chart. You do see this ascending channel here, right? And ascending channels, while the price is in the channel itself, is bearish because the price is declining, but we see that NIO actually broke above this channel, right? This is a bullish indicator as well. And it is currently sitting above the 21 exponential moving average, the white line on my chart, where before it has fallen below the 21 EMA. So this is also a short-term bullish factor. Now, we also see that the price is consolidating and is creating this super tight range here. And if we pull up something like the Bollinger Bands, you could see that the range is getting tighter and tighter, right? It's getting squeezed. And we are currently trading under the mean on the Bollinger Bands, right? If we break above this, then it is even more of a bullish confirmation on NIO. Now, let us take a look at the options activity. You see that the open interest for the January 2021 contracts, there is 17,299 additional open interest contracts on NIO. This is just the open interest change here. So an additional 17,299 contracts open for January 15, 2021. And you could see most of them are concentrated on the call side. And if we dive further into the options data, you will see that most of the contracts are actually bullish compared to the bearish ones, right? We're talking about almost an 80-20 split between bullish and bearish contracts. Now, one more thing, if we take a look at the volatility, at NIO's implied volatility, you'll see that it is currently trading below the 20 moving average on volatility, which is the orange line here. And when NIO does this for an extended period of time, and we start to see a cross between the 20 MA and the actual implied volatility line, then we tend to see these price spikes. And we saw this back here in August when NIO went from about $13, $14 to finally crossing above 20 bucks. We saw it over here back in around October when NIO was $21 and it finally jumped up to 28. And we are now seeing that cross here again. So all of these indicators look to me like NIO does have a potential to pop upwards in a bullish fashion, especially after the dilution effect from offering those shares seems to have passed. And then one more thing is the stochastic RSI looks like it's curling upwards, same thing as the RSI. Now, keep in mind, this is just analysis. Of course, I could be wrong. Of course, indicators can be wrong, but wouldn't you much rather make an informed decision based off of analysis than come in here and buy at the high when everybody's telling you to buy NIO and not really know where to go from here? I know a lot of people that bought NIO at $55 and they're caught holding the bag when NIO finally trades below 40 bucks. That is not an optimal entry. However, if you did buy here around where we're talking about, and we'll get into the trade ideas in a second, then you can easily set a stop limit below the 50-day moving average and escape with minimal harm. It's much better than buying, you know, at 55 or 57 and not knowing what to do and seeing the price decline, and now you're down 30%. So here are a few trade ideas on NIO. Of course, you can just buy here. Right now, we're trading at around $44. They offered up those shares at 39 bucks. And on December 14th, we actually hit a low of around $39. So we already hit the price point that they offered those shares at. Of course, we can bounce around between 39 and 44 for quite some time. But in my view, in the short term, this is still an optimal entry. And you could set a stop limit below $39 or $38, depending on where you're comfortable at, based on your risk tolerance and your budget. And if our analysis doesn't pan out, then you can escape with minimal harm. See, not a lot of people are going to tell you this. They're just going to tell you to buy NIO or Tesla blindly without giving you any real analysis or mitigation strategy up front in case the analysis is wrong, how to escape with minimal harm. Here is another thing you can do, and I've talked about this before. This is called a cash secured put. If we go out to the March 2021 option chain, you can actually sell something like the $40 put on NIO for $700, right? That means you collect $700 now. What happens? If NIO doesn't hit $40, you get to keep 700 bucks. You don't have to own the shares for this. I get that question all the time. Hey, do you have to own the shares to sell a put? No, but you do have to have the cash to buy at least 100 shares. You have to have that set aside. So if you sold this 40 put for $700, you get to keep $700 if NIO never hits 40 bucks. If NIO hits 40 bucks and you get assigned, then your cost basis on the shares is $33. Now, if NIO did drop to $33, wouldn't you buy shares at that point? Yes. So this is a win-win for a stock that you want to own. So if NIO actually hits $40 or below and you get assigned the put because you sold it, then you would essentially be obligated to buy 100 shares of NIO, not at $40 because you collected $7 per share to sell this. You're actually going to be buying it at $33. Of course, you can taper this to however comfortable to your comfort level. So if you're not comfortable selling a share of NIO at $40, you can or a put of NIO at $40, you can actually sell something like the $35 put. At which case, obviously, you're earning less because you're risking less. So you could sell this for $450, which means, again, you pocket $450. If NIO never hits $35, you keep that money. If NIO hits $35, then you're obligated to buy 100 shares of NIO, not at $35 because we collected $450 per share. So your cost basis on NIO would be $30.50, which is 35 minus the $450 per share that you collected. This is one of the best ways to buy the dips on stocks that you want to own, is selling a cash secured put. That way you take the guessing game out of the picture. You are already setting a price which you want to buy NIO at, and you actually don't know if it's going to fall to that price. And if it doesn't fall to that price, then you are collecting insurance in the form of this premium here, $450 for the 35 put, or if you sold the 40 put, you're collecting $700. And if it hits that price, well, then you get rewarded to buy shares of a stock that you want to own at a price well below what it's currently trading at now, which is almost $45. Now, here's trading strategy number 3. Say you do own 100 shares of NIO, but you're also afraid that NIO might drop in the short term or at least stagnate in the short term like it's doing now. What can you do? Well, you could sell a call against your shares. So in this case, if you have 100 shares of NIO, you can go out to, say, you know, the $55 call or the $60 call. And you could sell, let's just say the $60 call to be safe. You could sell this for $620. Now, this one, you actually do have to own 100 shares of NIO to sell the call. And if NIO does not hit $60 by March, then you get to keep $620. That's free money. If NIO hits $60 by March, then you will actually likely be assigned, but you will have to just give up your shares of NIO. However, you're not losing, because if NIO hits $60, you are actually forced to sell your shares at $60. Now, these shares you bought well below $60, right? So say you bought them at $40. Well, you're making $20 per share on NIO. Not only that, you get to keep the $620 that you sold the call for. So you are actually making $26.20 per share on NIO. So you're not giving it up for a loss, you're giving it up for a profit. And if you really want to own the shares again, you could just turn around and buy more shares of NIO at that point. These are just some of the ways that you could trade the markets, and specifically NIO in this case, without really having to box yourself into, oh, should I buy NIO here or should I not? You have to approach these things with a little bit more analysis. Now, again, at this price point, at $45, based on the chart that we saw, I actually don't mind buying NIO here, as I said, as long as I have protective stops in place. But this is a much more optimal place to buy it than it was at 57. And of course, if you are a long-term holder, you can just dollar cost average, which is also not a bad way to own shares of a stock that you really want. Meaning, regardless of what the price is, you would just buy on a scheduled basis. You can buy, a few $100s of your favorite stock every month. And regardless of what the price is over time, as long as that stock isn't, something that's totally crappy, as long as that stock actually has a future and continues to rise in value over the long term, then you are giving yourself the best average price over the long term by dollar cost averaging. Anyway, that is it for this video. If you got anything out of this video, leave it a big fat thumbs up. Sign up if you want access to our trade alerts. We had insane trades on Chipotle recently, on AMD, as you guys know. The LCA trade, obviously. We're up almost 100% on a Tesla credit put spread that was basically free money. I send all of this stuff out in the trade alerts. Sign up if you want access. We have over 1,500 traders. It's a wonderful community. We'd love to have you. Subscribe to the channel. Most of you that watch are not subscribed. Please subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.